Welcome back to America's Commercial Real Estate Show. I'm Michael Bull. Today our show is Boom, Bust, or Bubble, and this segment is brought to you by Valuate. If you'd like some great online software to do analysis on investment properties, check out getvaluate.com. My guest is Jim Costello. He's Senior Vice President with Real Capital Analytics here in Studio One. Jim, and you know, it seems like it's a smaller world than it used to be. It seems like we're impacted here locally and in the U.S. by things that go on all over the world. So what would you expect from the economy and some of these other countries around the world, and the impact for us in our economy here and then in our commercial real estate?
Yeah, smaller world. I think you're right on that in the sense of like just the ability to get to places. It used to be you could only get a direct flight from Detroit to China. Now just about every city, you know, here in Atlanta you can get a direct flight. It's so it is a smaller world in that sense. But it's a smaller world also in terms of capital moving and just looking at borders as just an abstraction, and just there's investments in different places that just go where the best yield opportunities are at. That's been impacting the U.S. I tell you, as I go around the country giving talks in different cities, I hear a number of appraisers, they'll stand up and say, I haven't seen cap rates this low in, insert the city name here, in my 20 years of work. Mm-hmm. But part of it is that their 20 years of work is focused on just that one market. They're not thinking about what happens in the broader global economy. The low yields we have for real estate today, we had those in Europe for a very long time. It's just with a slow growing economy, then the rates of return for real estate kind of come down. We're coming off of a period of intensive growth that we had in the 60s and 70s, when real estate, to be able to compete with the returns you got from development, you had to have a high return. So that development, that growth part of the economy, from when we expanded into the suburbs, that's starting to cool. So rates of return are coming down broadly, and so our rates of return are going to be more like the kind of the slow-growing European returns moving forward. Now China, they have really great growth compared to us. 6-7% is slow to them, but even that, they're looking at the United States and saying, hey, let's put some capital over there. That's a different thing. For them, it's not about the yield opportunity. There, it's a pure diversification issue. Until recently, many of the Chinese companies couldn't even move capital out of the country. All their eggs were in one basket. If you're a Chinese life insurance company and all your assets in the real estate portfolio are tied up in China, you looked at it and said, listen, I got to diversify. And so we're sort of the safe, stable portion of the portfolio. And some of them tried to, as soon as the rules were set, move as much money out as they could. Just from a diversification point of view, but I think the United States kind of provided that capital preservation play. They're also coming in doing some slightly different things than other global investors in the past. But really, the big story that always comes up, the regulators are concerned about with all this cross-border money coming in, they talk about Japan and the Japanese in the 1980s, and they get the wrong story there, I think. It's not, all cross-border capital is not the same. There's different motivations. The Japanese in the 80s came in with a yield play, just buy the highest quality assets and hold it for long-term yield. The Chinese are coming in actually building businesses. They're buying development sites. They're building assets. They're buying expertise so that they can build these global platforms. That's very different from what the Japanese did. And so I think that kind of capital coming in, I look at it and I think it has a little more staying power.
So what would you think, Jim, would be the top item, the top trend that you might want to be cautious about when it comes to commercial real estate values moving forward? What would impact the commercial real estate world negatively the most, do you think? What could be?
Negatively the most would certainly be interest rates. That's the one thing I look at every day. Where's the yield curve going? What components of it? And looking at corporate bond spreads. Those are the things I look at the most. It's not necessarily the case that as interest rates go up, cap rates go up at the same pace. But if we do get into a situation where the long end of the yield curve is higher than today, then cap rates are going to have to go up to some degree. Not one-to-one, but to some degree. So that's one thing I watch the most.
And let's go to the optimists in you. You are optimistic, but so what's the best thing that's going to make commercial real estate do well for a longer period of time, and how long do you expect the good times to last?
I'll tell you, this this notion that we're not building as much today, I think that has a beneficial thing for commercial real estate. Everybody watching the show has a career that's been colored by this expansion that we had out into the suburbs starting in the 50s, 60s, 70s. We're at the end of that. We may build more infrastructure with some of the policies that may be coming out of DC, but it's not like we're going to add 2 or 3 new ring road highways and sprawl even further out. If we did that, if there was some technology that allowed that to happen where the cost of commuting and time of commuting were faster, then that would be different. But without that, we're kind of at the final footprint for a lot of urban areas. And I think that's going to make the competition for space in these areas a little more intense than it was over the previous 30 years.
So the lack of new supply is the best thing happening to commercial real estate today.
It's certainly a beneficial thing. There's other good things that are happening. We have, despite the fact that it's not growing at the same pace as China, we have good growth in the economy today. There's good job growth, and there's demand that comes out of it. So, that's a healthy thing as well. So there's a couple healthy things I think that are happening for commercial real estate right now.
Yeah. So how long do you expect the good times to last for us all out here in the
Oh,
commercial real
gee,
estate
I'm
world?
sorry,
You have your crystal ball, right?
And that's a hard thing. Calling economists, here's a dirty secret, just letting everybody know this. Economists always get either the timing right or the magnitude right. They can't get both right, okay? When's the cycle going to end exactly? It's hard to say. But I think just the forces that are in play in the economy today, if we have a bit of an increase in interest rates, I think for the right reasons, then the price reaction will be nowhere near as intense as what we saw after the financial crisis.
Yeah, I've mentioned that to people too that ask me, and they said, "Well, do you expect a recession?" Well, yeah, at some point, but don't think about the last one. I wouldn't expect it to be that bad. I don't think anyone is.
Yeah, I mean that's the thing. There's no major imbalances in the economy today.
Yeah.
I mean, when I talk with the other economists and I always ask them, "What major imbalances do you see in the global economy today?" They bring up the Fed balance sheet. They've got a lot of assets there. So at some point they unwind that, and that might lead to a slightly higher interest rate environment. But I think they'll be slow and deliberative in their movements there. They're not going to do something suddenly. That's not their nature. So you've got that as a risk. There's China. It's been on a development binge. They're coming to the end of that. How they transition that growth, how they deal with the debts that they generated, that's going to be a problem for the global economy. There's a lot you can paper over with 6 and 7% annual growth, and with a government that can impose more bail-ins and whatever is needed to kind of keep things stable. But there still may be some problems that we don't understand yet, and so those are ones I continue to watch. But I'm optimistic that we'll be able to manage through those.
Okay, and I have a final question for you, and I think a lot of my listeners and viewers know who Jim is and what you guys do, but they do a great job of tracking commercial real estate sales and volume and cap rates and prices around the country, especially properties over $2.5 million. So
around the world.
Around the world. Excuse me. Yeah, I'm thinking just about us here in the U.S. Right. So, what would be your tip for commercial real estate owners overall right now of properties, let's say, for my audience in the U.S.?
The one thing, I actually wrote something for, it was more focused for lenders. It was a piece for CREFC tied to the annual summer convention. And I concluded it with my main point of advice was, don't do anything stupid. And, at this point of the cycle, don't go too far ahead of your skis.
Yeah.
We may be in a point when prices can't climb at double-digit rates anymore, but doesn't necessarily mean the prices are going to fall in the same kind of pace it went up. It may be kind of stuck for a while, a bit of a hung market. So it's okay to take some risks, but understand what you're getting into and don't go too far out on the leverage situation. I think that's one of the things that killed so many people in 06, 07.
Yeah, well, that's a good point, and and that's what my company said to me when they knew I was going to be on the show on the radio. They said, "Don't say anything stupid." But I'm sure I have. Well, Jim, thanks for being with us. We appreciate you being on the show.
Thanks for having me here.
And thank you for joining us out there on the radio stations, on iTunes, on YouTube or the show website. We appreciate you being with us. And connect with us, comment if you're watching on YouTube or the show website. Connect with us. All of our social media accounts can be found at creshow.com. And until next week, be sure that you always lead, learn, and laugh, and join us for America's Commercial Real Estate Show.